Yo, what's good, family? Hope you all are having an amazing day. In today's video, we're gonna break down the setup from yesterday's London Open on the Eurusd. Pretty simple pair, pretty simple setup, and basically it's not one that I personally took. Yesterday, I was trading Bitcoin at this time as every single day, but it's very interesting the setup we had on the Euro also. Just to go over different details we have on the strategy that you also have on previous videos, but it's always very important to refresh them, taking advantage that today is Saturday. We will go over some specific hand-picked setups, and on the weekdays, as you guys know, I usually break down the setups I have on my live analysis sessions with the private group of students. So with this being said, let's kick it off. We have the time exactly at 9 a.m. well, 8:59 a.m. at the London Open. And the first question, as always, is where are we coming from? This is the first thing. We're not coming from a very clear uptrend, although it's clear that we are on an uptrend. It's not like a super marked up bullish trend. It's like a kind of a consolidation, but a little bit choppy. The ones that are more advanced and know a little bit of liquidity, you guys will see this liquidity grab, liquidity grab. You know, it makes kind of sense, but for the ones that are new to the strategy, you will see this pretty much as a range. Whatever. We have this low, lower high, lower low. If you see, the price is breaking the structure right here. All right, this line, this is the lower high. It's broken right here with this bearish candle, so that's the high, higher low, higher high. That's really the structure. All right, we can mark up all the internal structure, but in this case it's not even needed because we have the break of a structure right here. Market goes up, then goes lower, and then goes up again. So we have that first impulse, second impulse, then market does a bearish BOS, lower high and lower low. We have a rule of the third impulse to the downside, so that could be another option. Now we see that before the open we have this little break of a structure, right? Internally we can mark up this as high, low, lower high, lower low. But here's the detail. When the low relevant BOS happens before the open, the significant BOS is still valid after the open, if this makes sense. So right here, let's remove everything so you guys can focus on the most important portion of the price. We have this last high and this last low. Why we don't even take this in consideration? Because this is low relevant, it's already broken, and it happened before the session. So we are not interested on this anymore. This is our last high, this is our last low. Therefore, now we go for the open. Last high and last low. The last low is a bearish rule of the third impulse because it's a lower low. It's completely valid because we have first impulse, first pullback, second impulse, second pullback. So if this breaks to the downside and breaks this low, it's completely valid. Now, not only the rule of the third impulse, we also have a lower high, which is a bullish break-off structure. That bullish break-off structure is completely valid because the candle that made the low, it's already closed, which is this one. So the very next candle would activate the buy stop, and it is active because the same candle that makes the low is not the same candle that creates and activates the entry. All right, so with this being said, the opening candle is the one that activates the entry, and a lot of people freak out because when they see this, they say, oh, my entry is wrong. They think that because the market is giving them drawdown as soon as the market activates the entry, they think that they should close the order. They think that they are wrong. And this is completely false because at the end of the day, you have a stop, you have an exit. Market will hit one of those two levels. But when that happens, when market hits one of those two levels, you will be out. That's why you have risk management, okay? But it's very important that you never do anything before market hits one of those two levels. Obviously, unless you have the red folders or something. If that's the case, fantastic, but you are not allowed to modify the setup outside of that very specific scenario, which is having red folders. If you don't have red folders, you cannot touch a thing. All right, so in this case we cancel the pending order to the downside because the long is already active, and basically we just wait. All right, market next candle, we see that recovers a little bit, goes back to break even. Next candle, it stays at break even, and we see that price again goes to drawdown. And this was very interesting because you know that the invalidation is always at the low of the setup, at the low of the whole schematic. If that's a bullish rule of the third impulse, the invalidation goes at the lowest lower low, right? If that's a bullish BOS, the invalidation goes at the low of the break of a structure. It's that simple. So you give the setup space to breathe, right? That's the best way to do that. So in this case, we see that this actually works. It's actually useful. Some other people, like if they, for example, have a bullish rule of the third impulse, they put the invalidation, for example, at the higher low or at the last higher low to have a smaller invalidation, but it's very easy for the price to do, I don't know, do something like this, creates the third impulse and grabs this higher low or even this higher low before going up. That can perfectly happen. So it's always better to put the invalidation at the most extreme level of the setup. So in case that market pulls back deeper, like in this case, you're still protected. In that case, eventually market goes up, creates a very strong bullish candle, and eventually hits the last exit. So very good example to, first of all, understand when do you have a low relevant BOS before the open. You can still take it the significant BOS after the open in the same direction, and always put your invalidation at the most extreme level inside the entry model. All right, obviously you're not gonna put the invalidation right here based on this low because that makes no sense, but you have to put it at the most extreme level inside of the entry model. All right, if this is the whole break of a structure, your invalidation goes below the lowest low of the BOS. With this being said, remember that on the description of the video you have my Instagram. You can ask about available spots for my private group of students. You will have access to the whole intensive course of the strategy, to all the live analysis sessions that I do from Monday to Friday in English and Spanish, and also to the private app with all the ideas that we send on the crypto markets, forex, and all the rest of the assets. With this being said, family, see you all in the next videos. Let's get it.